Welcome to the new Forex outlook for this upcoming week. We're going to start off with the fundamentals as always, and then move on to the technical side and look at what trading opportunities we have available for this upcoming week. Starting off with the fundamentals, we're going to start off with some geopolitical tension news. On Wednesday, we had news that there was a ceasefire agreement between Israel and Hezbollah, which was supported by the US and France to end the conflict. But a day after that, on Thursday, both of the sides started accusing each other of breaching the ceasefire that aims to halt over a year of fighting. So Israel said that it opened fire on Thursday towards what it calls suspects, with vehicles arriving at several areas in the southern zone. To justify that, we had the other side, Hezbollah, coming out and saying that the Israeli enemy is attacking those returning to the border villages, and that these are violations today by Israel, even in this form. As we continue down in this article, we see that Israel says that the Israeli military had identified several suspicious activities that pose a threat and breach conditions of the ceasefire agreement. On Wednesday, when the news came out that there was a ceasefire agreement, we saw that a lot of investors were starting to take profit from the safe haven currencies and commodities that they were invested within, and started moving a little bit towards having a stronger risk appetite. Thursday was a US holiday, it was Thanksgiving, and then Friday we started to see that a lot of the safe haven currencies and commodities ended up consolidating a bit. So when the market opens up today, we want to see how the market ends up reacting as it prices in these fundamentals and the back and forth, essentially, where both of the sides are accused of breaching the ceasefire, and see if the investors are going to start flocking right back in to safe haven currencies and commodities like gold and yen. Moving into yen, we see that yen hits 6-week high and the dollar dips for month end. A lot of the strength is coming from the fact that a lot of investors are suspecting another potential 25 basis rate hike from Bank of Japan. What we saw last week was that faster than expected inflation in Tokyo start to support the bets for Bank of Japan interest rate hike next month, which is this month in December. In addition to that, Bank of Japan's governor also recently hinted at the possibility of tightening the monetary policy, which is the opposite of what we have been seeing for the past decade or more for Japan, where they maintained an expansionary monetary policy and they maintained negative interest rates, but now we're starting to see those rate hikes also happening. So what we're going to do is keep an eye out for the inflation data when it comes to Tokyo, and really see if we are starting to see inflation picking back up, and that's really going to support the fact that Bank of Japan is going to be able to come in with another potential interest rate hike. Coming onto the US side, we have Trump picking Scott as the US Treasury Secretary. A lot of investors, the markets, the financial markets are taking this in a bit of a more positive way, especially when it comes to the bond market. So the prioritization for Scott here is going to be delivering on election tax cut pledges. And addition to that, the tax cut measures would include making Trump's first term tax cuts permanent, as well as eliminating taxes on tips, Social Security benefits, and overtime pay. And then also enacting on tariffs, cutting spending, and maintaining the status of the dollar as a world reserve currency. That takes us right into Trump potentially threatening new Canada, Mexico, and China tariffs that threaten the global trade. Trump said that when he takes office on January 20th, he would impose a 25% tariff on imports from Canada and Mexico. And in addition to that, an additional 10% tariff above any additional tariffs on imports from China. So this potentially brings in the sentiment of, can we start to see global trade war happening? And over the weekend, after this news came out, we saw that Trump was also demanding commitment from BRICS on using the US dollar. And he said that if BRICS, any of the BRICS nations, were going to move to create a new currency or adopt a new currency as an alternative to using the US dollar, then they could expect 100% tariff on their goods as well. So as of right now, when we're looking at the market sentiment, a lot of the investors are convinced that Trump's expansionary policies are going to end up reviving inflationary pressures. And that brings us to the conversation of next year, what is the Fed going to do when it comes to interest rates. So we know that interest rates have been at pretty high levels, and we have finally started coming back into the conversations of those rate cuts, and now starting to see another potential rate cuts this month as well. But all of these policies are also going to impact the inflationary pressures and also impact whether or not we're going to maintain those interest rates. Are we going to have to hike up those interest rates again next year, or are we in line with those continuous rate cuts to help the economic growth happening here? This upcoming week, we have US employment data coming out as well that we're going to watch out for. That's going to be very high impact, and that the market is watching out for in general as well. Last month, we had employment data that was impacted from the hurricanes and strikes, and that was quite disappointing when we're looking at the data points that were coming out with NFP. So this month, the investors are expecting a snapback after the storms and strike. Let's go ahead and move on to the economic calendar so then we can further discuss that article essentially. So starting off this week, it's quite easy, as you can see, with a lot of yellow folders, some orange folders, and we don't start getting that employment data until Tuesday from the US. So the job openings, for example, we're expecting that to be around the previous numbers, so not too much of a hike, but we're expecting a little bit of more jobs to open up here, especially around the holidays. We do tend to see more jobs opening up, seasonal jobs. And then going on to Wednesday, you have ADP non-farm employment change coming out. So this is mostly from the private sector. So the number of employed people during the previous month, excluding the farming industry and government. This gives us a good forecast of what we can expect to see, paired up with the JOLTS job openings, and then also the data points that we're going to get on Thursday with the challenger job cuts. So we want to see a lower percentage here. Last month, we saw 50.9% job cuts happening here. So we want to see something lower than that. And then every Thursday, we get unemployment claims. So we do want to see unemployment claims dipping down a bit more, but overall, as you can see, we're expecting something closer to the previous, so not too big of a change here either. And then going into Friday, we have NFP coming out that a lot of investors watch for. So that is on the fundamental and the economic data side. We're going to go ahead and move over onto the technical side and see how those fundamentals line up here. Very first thing that we're going to check for is the structure here. As you can see, the structure remains quite bullish. After price created its last massive high, which was at this point, we have came back and retested into that area once. And then after that, you can see that how we are simply grabbing liquidity and just pushing bullish, right, with insanely bullish momentum. So as we drop down to lower time frames and we're looking for, more trading opportunities, essentially our point as retail traders, our goal is simply to follow and ride the wave and really not try to start a new trend or catch a new trend right at the very beginning of it. So what we want to see instead is on the daily time frame, 4-hour time frame, weekly time frame, that trend already being started, there being confirmations of strong support and resistance, and then looking for those entry points, right? So as of right now, we don't have any indications of, price reversing or looking for any longer term sells. All we're doing is just riding the wave, but also being cautious of the fact that we're sitting at all-time highs. So we do really want to be careful of any profit-taking levels that might end up occurring here. When we come on to the weekly time frame, this is where we're going to start to map out our ranges. So this is last week on Friday. So with this new week, we also want to be cautious of the fact that it is also a new monthly candle. So we want to give price enough range to create any top and bottom wicks before jumping into any longer term trade opportunities. So what we're going to do is mark off this new weekly high right here from last week, that top wick rejection at that 45,100 mark. And then if price pushes back down, then we're going to come back and target into this little support area that's been formed at the moment, which is going to be that 44,470 mark. As we drop down to lower time frames, we can definitely narrow in our zones. So as we can see here, that was that bottom wick rejection, and then for the last couple of days, we saw a lack of volume in the market. Friday, we got a little bit of a bottom wick and then push right back up, creating new highs and still maintaining that bullish structure, but still coming back and essentially closing into this range here. So when this new daily candle starts forming and we're looking for potential scalp opportunities, one level that we want to be careful of as we drop down to lower time frames is going to be right around here, which is right into that top wick rejection from a couple of days ago where we had that top wick right there. And then price finally breaking above that, that's that bullish momentum that helped us, continue to the upside here. Other than that, we're sitting in this daily consolidation for a little bit. So that's kind of our range when we're looking for shorter term trades and whether or not we have a buying or a selling opportunity just yet. So these are just ranges that we have created so far of potential trade opportunities and also confirming what is the structure. So even within this consolidation, we have those higher highs and higher lows being formed. So coming onto the 4-hour time frame now, same thing, you can confirm that higher high and higher low being formed where you have after price had a massive gap up essentially here pushing up bullish, we created a high, price pullback, ended up creating a higher low, pulls back after grabbing that liquidity from here, creates a higher high, comes back, pulls onto a support, and then we break our own highs with that topic rejection. So last 4-hour candle ended up closing weak, bearish, almost like a doji. What I'm looking for any continued buy opportunities is price to create a little bit of a bottom wick and then push back up as it breaks that 4-hour high. Then we can look for those buying opportunities to the upside coming into that 45,000, 100 mark essentially here. So after clearing that 45,000 mark right here, we have 45,100 that we can look for those buying opportunities. For any selling opportunities, I want price to reverse back down below this range, and then we can look for sells to come back and tap into this 44,750 mark. Come on to the 1-hour time frame. We start to see a little bit more clearly how price is maintaining that bullish structure here, still creating those higher highs and higher lows. So as you can see right around here, price had a nice bullish push up right into these areas and then came back and kept tapping into the same exact high, essentially a nice little retracement, broke our own high, came back, held onto the support area for quite some time until finally we got a bottom wick rejection here, grabbed that liquidity. You can identify liquidity wicks after by looking at the volume that follows after. And then we broke our own high, that nice top wick rejection. The previous hourly candle failed to break the hourly low, the one before that. So we kind of closed out a little bit weak here in the volume. So what I want to see is can price push back down a little bit deeper here, hold on to a support essentially, and then push back up, or simply give us a bottom wick rejection here and then push back up. Those are the buying opportunities that I would take advantage of. And then for sells, I want to see price coming back and tapping into this. So even the short-term bullish structure is not necessarily broken until this 44,750 level is broken, and then we can look for those selling opportunities to come back down a bit deeper into that 44,500 mark. Let's come on to GJ here on the monthly time frame. We're sitting at very important levels when you're looking to the left, some very strong historical levels that we have rejected. And right around here, still maintaining that bullish structure as well. Nothing has really changed here. We have not seen any longer term sell indications just yet. Well, instead, what we are doing is coming back and tapping into those previous historical levels. So even here where price is, coming back and kind of inching towards, that is an important level. As you can see, price failed to break past that area for many months. And then finally, we got that volume to the upside. This is where Brexit was announced. And then even then, price came back, respected that area as resistance, and then we had a sell-off here. As we push back into these areas, again, we needed that fundamental push. And until that happened, we were consolidating out, essentially mimicking whatever's happened here to the left. Once we got that fundamental push is really when we continued to the upside. And now that the yen is starting to gain strength with Bank of Japan increasing those interest rates and Bank of England saying that, we need to watch out for more clear signs of easing of inflationary pressures before the rate cuts, and we're starting to see some more economic weak data coming out from England. We're starting to see that the yen is gaining more strength and this pair is now starting to come back down. But that doesn't mean that we're ready for a massive sell-off just yet, but that just means that we're going to be watching out for the economic data a little bit more closely so we can also take advantage of these sell opportunities that are coming down. So for now, what I'm going to do is mark off that level at that 189,900. And that is because when you look to the left, that's the same exact area where we had a top wick rejection and then came back, consolidated for a few months before a nice push up. Same exact area that we came pretty much close to with a top wick rejection before a massive sell-off. Come a little bit more recent to the right, you start to see the same thing as we're approaching that level, some consolidation, and then finally a break past that. And then the last few months, we have failed to break below that area, but we keep tapping into it. And then even here with that weak doji bullish close, we had a bottom wick, a nice push up, and we're kind of just hanging into this area. So if price breaks below 189,900, then the next area of target for longer term swing trades or even position trades, or just continue to scale into your trades, is going to be coming down into that 185, almost 400 mark, or 184 mark right around here. And that's a pretty good range with clean movement, as you can see to the left. Some clean movement just to come in and fill that wick for almost 500 pips. So we still want to be very careful that bullish structure is still not broken until price can clearly break past this 184 mark and then continue pushing back down bearish. So that is still a very bullish structure right there. That is still a test of that bullish structure and then a push back up. That structure is really not broken until 184, or even this level right around here, 184 to 180 is broken. Then you want to retest and a continuation down. So right now, all we're doing is playing off of that yen strength and the weak pound here essentially. For any buying opportunities, same thing. We want to see price hold onto a support into that 189,900 and then push back up. So this is still the monthly time frame. All we're doing is mapping out our range and making sure as we drop down to lower time frames and price approaches these levels that we don't just enter off of a 1 minute, 5 minute, 15 minute, 30-minute confirmation, that we're actually looking for proper confirmations with the hourly closes, 4-hour closes, daily closes, and then looking for our entry there. As you can see, as we approach this 189,900 mark, historically price has consolidated here a lot more, and we have needed a lot more fundamental movement and a lot more economic support, economic data support for price to continue pushing past these levels. So even here, as we come back close to that 189,900, we end up consolidating a little bit of a bottom wick, pushes back up. We don't have enough volume to continue pushing, so we revisit this area here once again, and then finally we get that bullish push up. Over here, same thing. As we try to break below that area, we grab that liquidity here from the left, push right back up, come back and revisit into these areas essentially, even after a nice retracement here, and then finally push back up, and we're just revisiting into these previous areas of almost 200. Now we start to see a sell-off. So this is the area that we're sitting in. This is why we need to be very careful here prior to looking for a trade, because on the 15-minute, 30-minute, you could see a little bit of a break happening here, but that could just give you a wick and then fake you out and push right back up. So it's very common. Just follow whatever has been happening here to the left, and make sure that you're waiting for your proper confirmations prior to an entry. Coming onto the daily time frame, we start to see that the previous daily candle started off quite bearish, no top wick here whatsoever, and then came down, made a bottom wick rejection, rejected that. As we drop down to lower time frames, I'm sure that we're going to start to see some bullish candle closes here, because that's what helped this candle push back and close above this range. Coming onto the 4-hour time frame, this is where we start to see those bullish candles, and then came right back and closed right above that 190,500 mark. And so before looking for even scalp opportunities, what we want to see is price clearing above these 4-hour consolidation levels. So around that 190,900 mark, if we can continue breaking past that, then we have clean buy opportunities starting off as a very quick scalp opportunity for around 40 pips or so, and then continued buys coming up into almost 139 pips. But we do want to be careful as we approach this level here as well, because that is a test of that short-term bearish structure. So you can see even from a higher time frame and coming down, how structure is very important, and make sure that you're not trading against the structure here as well. So that entire bearish structure that has been happening, all that consolidation right up into these levels, and then finally price tries to break below that area here, comes back, revisits into that consolidation level, gets a massive sell-off, and then at each of these points we're breaking lows and creating higher or lower highs and lower lows here. So if we want to see if price can push back deeper into that area and then come right back down from here. So all of this here so far is simply the yen strength that's pushing this. USD JPY is quite similar to GJ. So when we come here, historically, we're coming back and revisiting some of the same key levels here as well. So if you look here to the left, 148,800. I'm also going to mark off the current resistance here. And with each of these pairs, I'm going to reiterate the fact that there's going to be a new monthly candle forming. So you want to give price enough room to make any bottom and top wick rejections. And this is usually the time where a lot of people do end up getting stuck in those fake outs. So with that resistance being formed right there, that's kind of the range that we're looking at the moment. If price can break below that 148,800, then we can start entertaining some more sell opportunities to come back down deeper into this area. So why did I mark that off and not this? When we look at this range here, you see a top wick rejection right into that area, another top wick rejection, the following candle gives you a bottom wick and then pushes above that area. We need another bottom wick right here and then a push up. That monthly candle also gives you a bottom wick and pushes up. So that tells me that when we drop down to lower time frames, we're going to see a lot more price action here and see the fact that price needs a little bit of more support before it breaks out of it. On the weekly time frame, you see that for multiple weeks, price fails to break above that area. It even fails to fill the previous weekly highs, and then finally we get that little bit of fundamental push happening in the first 2 weeks of October, and then finally you get a nice push up there. Here you get that nice break and retest, and then a push back up here. Same thing here, support, push back up here. Same thing, we revisit here, and then you see a bit of a pullback and then a continuation down. So if we want to look for continued sell opportunities, we need 148,800 to be broken. So when I say continued sell opportunities, I'm talking about swing trade, where you can come in for potentially 200 to almost 300 pips. That doesn't mean that you cannot trade here. That just means that as you get closer to this level, make sure that you're not just looking for a scaling immediately. You're waiting for your proper confirmations prior to an entry. But this can absolutely be a quick scalp or even a day trade opportunity here. Come onto the daily time frame and we start to see a little bit more consolidation into these areas before a bottom wick and then a push. You see a nice resistance here, a corrective move resistance, and then a sell-off happening there. And so the further you look back, the more confirmations that you get that this is a very important level. And we tend to see a lot more consolidation, a lot more volatility around this area. So we just want to be extra careful. Another area that I'm going to mark off is going to be right here, that resistance area. So as soon as price clears out of this, that's when we start to get some of those cleaner movements. This is going to be important when we drop down to lower time frames, but this is something that as you mark up your charts even more, you're going to be able to identify right off the bat. Come on to the 4-hour time frame. On the 4-hour time frame, even in that bullish structure here, we get that one last high before price revisits into that 148,800 zone, and then finally a push. When you're looking at the current price action, you had a nice sell-off that happened on Thursday with USD JPY. We come back and revisit into that area for 1, 2, 3, almost 4-hour candles. We come back and keep tapping into that area before a little bit of a sell-off. As you can notice, this bearish candle doesn't even break that bullish low right here. And then with the last 4-hour candle, we have a bottom wick and it kind of just come right back into that area. So that means that if we're looking for any buying opportunities, even as quick scalps, when this new candle, new daily candle, new monthly candle starts forming, we want to wait until this 4-hour high here is broken, and then we're targeting almost 50 pips to the upside to come back and revisit into that area. Quite similar to what we saw on GJ, we had this bit of a consolidation here, and then finally we saw a massive sell-off happening here. Again, that strength coming from yen, and then price pushing right back up right into that area of almost 152, 100. Another sell-off, creating lower highs and lower lows essentially. So we want to confirm that there's a support here and then look for your buying opportunities to come back and revisit into that area. For any scaling opportunities above that, you wait for a break and retest and then a continuation back up into that 15500 mark right around here. And that is that potentially a test of structure, possibly, and then you wait for better confirmations for a sell-off to continue right back down. Now coming on to gold, sitting at all-time high, just like US30 that we had analyzed, I'm going to mark off the current high that we have here at that 2745.6. Still maintaining a massive bullish structure here. And then I'm going to mark off the current weekly low. So that means last week, the low that we ended up creating here. And then that is going to be the 2607.1 level. Something else that kind of catches my eye here on the weekly time frame is also going to be this minor resistance here before price finally breaks above. And so I want to see, as we drop down to lower time frames, what does price end up doing here? So coming onto the daily time frame in that bullish structure, We ended up creating a high, and then as you can see, for many days, we just keep coming back and revisiting into that area with those top wick rejections. And then finally, price reverses back down and holds on to a support into this 2607 mark. And then finally, you see a nice push up, but a little bit of a break and retest, and then a push back up. We come back, revisit that area as a support for a quick retracement, and then a nice sell off. And then same thing here, we come back and with a nice retracement, hold on to a support into this 2607. And then the last daily candle ended up rejecting that and then coming back and closing here. So when I start dropping down to lower time frames and start looking into potential buy or sell opportunities, I want to make sure that this is going to be my no trade range. I'm not looking for a trade in this at all. Instead, for any sell opportunities, I'm going to wait for price to break below that zone and then continue back down, targeting right into this 26-25 level, and then a continuation down for that. For any buying opportunities, I'm going to wait until price gives me some sort of a bottom wick rejection here, somewhere into this range, and then pushes back up. As price clears this, I know for a swing trade opportunity, we're going to have much better buying opportunities to come back and revisit into this area of around 2700. So you can look for potential scalp opportunities as long as you understand what the limitations of your trade is going to be. When you drop down to the 4-hour time frame, you start to get a little bit of more confirmation of that short-term bullish structure happening here. So you have this bullish structure right around here, where you had a nice push up, a retracement, and then you have these smaller higher highs and higher lows being formed. The last 4-hour candle did end up closing bearish here, so that's why we want to be a little bit more careful prior to entertaining any buy opportunities, which is also why I said that I personally would not be looking for a trade right here. Instead, I'm going to wait for those clear supports and resistance to be formed prior to an entry. So when price breaks below that, you're going to have that clear resistance by that point to look for those sell opportunities to come back and revisit into this consolidation. If you're looking for any buying opportunities, you're going to have a clear support and then a push back up. You want to clear out of this area completely, so then you have better buying opportunities to the upside. So this week, what we're going to do is simply wait and be a little bit more patient. Even on the hourly time frame, there's a lot of consolidation right into this area. We have a ton of fundamentals that are going to come out. There's a ton of fundamentals that the market has yet to price in. So there's a lot of opportunity in the market. On Tuesday, we're going to have a live trading session on YouTube. I will go ahead and post the timing for that on my Instagram at SharmaFX, and I will also post the timings for that on YouTube. So make sure that you guys are keeping an eye out for that. And other than that, make sure you guys are trading safe. You're using proper risk management this week, because that's going to be very key. I will see you guys on Tuesday for a live trading session.